Abigail was just running us through how volume has been so elevated. Do you expect that continue, and how are you seeing it show up across asset classes, not just equities?
Yeah, thank you very much for having me, and I love seeing that chart because that's what the market maker thrives on is volume and volatility. And we've certainly, I thought 2020 it would calm down in 2021, and we've actually seen the opposite, as you just showed on that chart, where we've seen significant participation from retail investors in the United States, and it's really been broad across the world. I mean, we've seen a lot of volume and volatility in our Asian business in Japan, and we've seen $40 billion days across Europe, which is nice to see. So, it's just there's a lot of cash awash in the system, and investors need to invest it somewhere. So you're seeing a lot of rebalancing and a lot of new participants in the marketplace, particularly here in the United States.
Well, speaking of new participants, Doug, how much of this volume is actually coming from the retail investor? Over last year, Citadel Securities, Joe McCain over there had told us it could be as much as 25% at the busiest moments. What are we seeing this year?
Yeah, I mean, Joe's spot on. He's a smart guy, obviously, and these are all public numbers. And so the retail participation is anywhere from like 22 to 25% per day, which is about an 8, 9, sometimes 10% increase from what we saw from 2019. I think a lot of it has to do with some of the structural changes in the marketplace, zero commissions, right? So there's a lot less friction in the marketplace. And obviously the pandemic and people working from home and maybe having a little more free time to trade and to invest. But certainly we've seen this systemic shift in the U.S. equities marketplace. I think it's here to stay.